My good people, I'm Rob Pasker, anchor for the Young Realtists division of NAREB, YRDtv. Yes, you know what time it is. It's Monday, 9 p.m. Eastern Standard Time. That means it's time for some YRDtv. And if you don't know, it's time for you to get familiar. So let me put you on. Let me tell you about who we are and what we do. All right. NAREB is an acronym for the National Association of Real Estate Brokers, the oldest and largest African-American real estate trade association in the country, which is comprised of over 90 local chapters across 35 states. The Young Realtists division of NAREB was founded in 1996 with the mission of redefining the real estate culture for tomorrow's leaders. And we do that by empowering the youth and communities through wealth building, career exposure, mentorship, professional development, and leadership training. With YRDtv, we are excited to have the opportunity to provide unique programming that will highlight and celebrate relevant information, policies, and real-life stories surrounding Black real estate in the United States of America. Yes, so this is a whole movement, and that includes you. If you're watching right now, let me know you're in the building, because it ain't about me. It's about us. It's about our organization. It's about getting you all the information that you need to be as effective as you can be in your local markets. And it's about pushing that needle for Black home ownership in America. So shout out to you all. If you're in the building, let me know. That energy goes a long way because this is live. As we talk about today's topic, if you have something to add, there's a link. Hit the link. Pop on, let's talk about it one time for the one time. But whatever the case, it's a movement. So, and it's going to take everybody to move this needle forward. So if you're here, like, share, comment, hit the link that's in the description, and that link is going to take you to all things YRD. We want your membership. We want your membership. Shout out to Madam Stephanie Burton. Welcome. Yeah, we want your membership. We want to see you at the conferences and conventions. We want to know what's going on in your markets. We want to know what impediments that you're experiencing. We also want to know what triumphs you're experiencing in your market. So it's all in that link. You can let us know, and come on to YRDtv, because like I said, this is a movement. It's about putting us in position to be the greatest that we can be. So tonight's episode, we're going to talk about a topic that is a big deal when it comes to home ownership, specifically Black home ownership. And what we're talking about is student loans. Yes, student loans. Between generations X and the millennials, we are the most debt-ridden generations in America, and one of those reasons is because of student loans. Now, we value education. Education opens doors that otherwise wouldn't be open, right? But the system that we have put people in a position where they've accumulated debt that makes it hard for them to become homeowners, and this disproportionately affects Black home buyers. All right, and so according to the State of Housing and Black America report, which you can find on NAREB.com, the debt-to-income ratio of Black millennial home buyers is the biggest reason that they get denied for student loans, and that accounts for about 35%. If you just for being thorough, 23% of Black millennial mortgages have been denied because of credit. But the biggest thing we're seeing is student loans. So as realtists, yes, we are practitioners in our markets. We're practitioners, and we're some of the best practitioners in our markets. But outside of being a practitioner, we're also advocates. And that's what sets us apart from most real estate professionals. We advocate, and so it's important that we have the facts, we know the issues, and we can articulate these issues to the people that are in power as we advocate for our constituents. Because we might not be elected to office, but you better believe that we are working for the people in our communities. And so it's important, like I said, that we know what's going on. We know the numbers in our communities, and we also know the policy positions that we're taking as an organization so that we can articulate it county by county, state by city by city, state by state, region by region, and articulate that so that we can see the changes that we want to see across the nation. So you might ask, what is NAREB's policy position in regards to student loans? If you are interested, that information is on NAREB's website. If you go to what we do, you can go under policy positions and you can break it down, and NAREB does have a policy position regarding student loans. So I'll tell you a little bit about it, and as I do, I just want to give a shout out to YRD National Second Vice President, Madam Rashida Jones. She's also the National Treasurer of the National Association of Real Estate Brokers. So she holds it down on many different levels, and we appreciate all she does, all the insight she brings, because Madam Rashida is a powerhouse, y'all. You better believe it. So get familiar with her. Yes, indeed. But let's dive into this. So like we said, when it comes to student loans, the U.S. debt right now in America is over $1.57 trillion, which has increased over 300% since 2004. Statistics show that 87% of Black students attending four-year public colleges borrow money to fund their education, and the majority of these loans fall under federal student loan programs. So 46% of Black college graduates report delaying purchasing a home due to student loan debt. And like I said, 35% of Black buyers that apply for mortgages get denied because of their student loan debt. So what is NAREB's policy position? Well, past regulations have allowed borrowers to qualify for their home loans if their student loan debt was deferred for 2 years. So if your student loan was deferred for 2 years, it technically wouldn't count against your DTI. But, they have since changed the federal student loan program so that deferments are only maximized. You can only have a deferment for a maximum of 1 year. And then, yes, you may be able to renew that deferment, but it's only going to be for 1 year. So the unintended consequence is that the current financial regulations for FHA, VA, and other GSEs such as Freddie Mac and Fannie Mae did not adjust in tandem with the change in deferments. So the most impacted by these unintended consequences are Black home buyers. And unfortunately, Black income, wealth, and home ownership have decreased since 2004. And so, to put it short, before, if you had your student loans deferred for 2 years, it wouldn't count against your debt to income ratio. Therefore, you would have more expendable income to be able to qualify for a home and purchase one, which is a very important in the markets, especially in the more expensive markets. But, they have changed, as I would say, the federal loan programs have changed their deferment programs so that you can only defer for up to 1 year maximum. And the student loan programs, the financing programs did not switch that up. And so with that being said, the National Association of Real Estate Brokers' recommendation is to return to the 2-year deferment for federal student debt and standardization in the underwriting process for FHA, VA, and GSEs. So, and better believe there are many different policy positions that NAREB has taken, but in regards to student loans, this is it. And so with that being said, as advocates in your community, when you talk to your local congressmen, your local senators, your local House of Representatives, bring up these issues and be able to articulate that, because that's what it's about. We advocate. We're practitioners, but we advocate, and we use our platforms to make the world around us a better place. So, with that being said, as we work politically with our local politicians to change these policies, we have seen some policy changes in regards to these loans from the GSEs and FHA. So in June of this year, and this is something I found out recently, but June of 2021, FHA changed their student loan calculation when it comes to debt to income ratios from 1% to 0.5. So for instance, first and foremost, if you're paying a student loan right now, your lender is going to use that student loan payment. Point blank, period. Now, the lower the payment, the better. But if your payment is zero, if you're on an income-based repayment plan and it's zero, your lender is going to use 1% of that student loan balance as your monthly debt to income ratio debt obligation. So that means for a family, a person who has $60,000 worth of student loans, before June, FHA would take that $60,000, take 1%, which is $600, and that $600 would be your monthly debt obligation for your student loans. So for some people, when you add in whatever other loans they have, car loans, credit card down payments, or minimum payments, that might take them over the debt to income threshold to the point where they couldn't, purchase what they wanted to purchase. Not right, but now, with FHA is now only taking 0.5%. So now, instead of it being a $600 monthly debt obligation on a $60,000 student loan debt, that's only $300, which does open up the door for a lot of people to become homeowners despite their student loans. And it's also the same for Freddie Mac's Home Possible loan, which is a conventional, which is in a lot of cases is better than FHA, because if you know anything about this market, it's highly competitive. A lot of sellers don't want to deal with FHA if they don't want to, and in most cases they don't have to because of the multiple offer situations that are created by the low inventory that's out here. So with that being said, if you have some buyers that would prefer to go conventional and they're concerned about their student loan debt, educate them on the Freddie Mac Home Possible loan, which is a 3% conventional loan, which they can use, and the debt obligation is only 0.5% on that student loan total balance. So with that being said, it's important that we educate ourselves, because what do they say? Knowledge is power. But what is power? Power is the ability to change. So by educating ourselves, we can help change our clients' lives, and not only just change their lives, we can help them educate themselves. We can educate them so that they can educate the people around you. And guess what, people? A candle loses no fire by lighting another wick. And that's what we're here for as Realtists. Yes, we're practitioners, we're educators, we're advocators. We're a lot of things, but that advocacy, that's one of the biggest reasons that NAREB was put together, to advocate, to open doors for the people whose doors have been shut the most. And that just happens to be Black people in America. So boom, there you have it. As for when it comes to student loans, know the policy position so you can articulate it. If you want to know more about that policy position, go to NAREB.com, check out the policy positions under what we do. All right, and then as far as the different loans and how student loans are affected, or your debt to income ratio is affected by student loans, know that, FHA is a 0.5 percentage point if there is an income-based repayment plan, or they'll take your minimum payment. So if you can get your minimum payment low, that's going to be in their favor. All right, and the same with Freddie Mac's Home Possible loan. It's a conventional loan, 3% down. Seller can pay up to 4% of purchase price towards closing costs. It's a great conventional loan for a lot of people. So boom, you got that. So let's talk about some coming events. Every fourth Tuesday, which is tomorrow, we have our YRD General Body Meeting. So tap in. If you haven't joined YRD, go to the website that you can see right here. Become a member, get on that mailing list so you can get all the details about the events that we have coming up. Also, it's not too late. Go ahead and register for the MidWinter Conference. It's going to be in San Antonio from March 1st through March 4th. It's going to be action-packed with knowledge, with fellowship, with just growth and love, you know. So I'm looking forward to fellowshipping with all my Realtist family from across the nation in San Antonio. I'm looking to come away more knowledgeable. I'm looking to come away with more tools and resources to affect the world around me back here in Toledo, Ohio. And it's going to be a bomb time, and it'd be better if you were all there. So with that being said, hit that link down in the bottom. If you got something to share with us on YRDtv, we would love to have you. Hit that link, you know, nominate a pioneer. Let us know what's going on in your markets. Let's talk about it. But until next time, you know what? I'm going to see you all in 2022. This has been the last YRDtv of 2021, and 2022 is going to be a phenomenal year. Big things popping, y'all. So get with the movement. Don't get left. Don't get left, because it's a movement and we moving forward. So go up with us. Let's elevate. All right. So I'm Rob Pasker, and this has been this week's episode of YRDtv.